Welcome to The Explainer. I'm absolutely pumped to have you here today. So, we are putting on our investment analyst hats to unpack the financial machinery behind what I think is one of the most compelling stories in the utilities sector right now, and that's NRG Energy. We're zeroing in on their Q2 2026 results, and let me tell you, the sheer scale of the capital being deployed and generated here is just fascinating. We're going to use the hard data to see exactly how this company is positioning itself to capitalize on some truly massive macroeconomic shifts.
Okay, let's dive straight into this. 70.67%. That right there is NRG Energy's trailing 12-month return on equity, or ROE. Now, to put that into perspective and explain why that number should immediately grab your attention, the industry average ROE for utilities right now sits at just 11.21%. Literally, Energy is operating at a level of capital efficiency that absolutely crushes the broader market standard. It tells us right out of the gate that management is doing something highly effective with the capital entrusted to them by shareholders.
Here is our roadmap for today's explainer. We'll start with the NRG Energy snapshot, then hit the Q2 2026 financial results, look at how they're fueling the AI boom, check out their smart capital allocation, and wrap up with the 2026 outlook in comparison. Let's get right into it. Section 1. The NRG Energy snapshot. Before we can truly analyze the quarterly numbers, we have to define exactly what NRG Energy looks like today.
At its core, NRG is a powerhouse of scale. They're serving around 8 million customers across North America. But honestly, the real story is on the supply side. They currently operate 25 gigawatts of competitive power generation. And what's absolutely crucial to note here is their recent acquisition of the LS Power portfolio, which added a massive 13 gigawatts to their fleet. This wasn't just some minor incremental upgrade. This acquisition essentially doubled their capacity and fundamentally transformed their ability to provide reliable power across 9 different states. It's a real game changer.
So why is that expanded capacity so critical right now? Well, it's because of the macro catalyst staring down the entire power grid, which is soaring electricity demand. We are looking at a perfect storm of load growth, and it's being driven by the massive build-out of AI data centers, a resurgence in domestic manufacturing, and just the broader electrification of the economy. This is a powerful, long-term tailwind, and NRG's expanded generation business places them directly in the path of this unprecedented demand.
Section 2. Q2 2026 financial results. Now, let's look under the hood and see how this macro positioning translates into actual dollars and cents. For the second quarter of 2026, NRG reported a GAAP net income of $506 million. Now, what's really interesting about this is that it's a staggering $610 million increase from the prior year. When we dig into the why behind that massive swing, the data points clearly to 2 primary drivers. First, the successful integration of those newly acquired LS Power assets we just talked about, and second, higher realized capacity prices, particularly over in their eastern markets.
Let's break down these core profitability metrics just a bit further. We can see GAAP earnings per share sitting at $2.32. But, the metric that truly illustrates the fundamental health and cash-generating power of this business is the adjusted EBITDA, coming in at a massive $1.217 billion for the quarter. Furthermore, their free cash flow before growth investments was $1.025 billion. These aren't just accounting profits on a spreadsheet. This is actual, hard cash moving through the business. And that gives NRG incredible flexibility to reinvest, pay down their debt, or, as we'll see, reward their shareholders.
Moving right along to Section 3, fueling the AI boom. Having established their strong financial footing, let's look at how NRG is actively building an economic moat to capture this massive demand. I absolutely love this quote from NRG's president and CEO, Robert Gaudette. He said, "Today we provided a progress update on our Bring Your Own Power data center strategy. This is the model for how large load growth should work." I mean, this is a brilliant strategic pivot. Management isn't just sitting on their hands waiting for demand to hit the open market. Instead, they are actively securing long-term, contract-backed generation partnerships with hyperscalers to directly meet their insatiable need for reliable power.
And this brilliantly illustrates exactly how they are executing that strategy on the ground. Their strategic moat is built on tangible, hard assets. The LS Power acquisition added 18 natural gas plants to their portfolio. They're rapidly advancing 1.5 gigawatts of Texas Energy Fund projects. And notably, they just achieved commercial operations at the 415-megawatt T.H. Wharton facility, which, by the way, is NRG's first new-build generation asset in nearly a decade. AI infrastructure requires 24/7, always-on, reliable baseload power,
and NRG is aggressively building and buying the exact physical assets required to provide it.
Let's shift gears to Section 4, Smart Capital Allocation, because any truly great investment relies heavily on management's ability to allocate capital effectively. For 2026, NRG's management has committed to returning an impressive $1.4 billion directly back to shareholders. This return is split between $1 billion allocated for share repurchases and roughly $407 million in common stock dividends. Now, it's important to view this through an analytical lens. A $1 billion share repurchase program isn't just some accounting maneuver, it's a powerful signal. It shows that management has deep confidence in the long-term intrinsic value of their own stock. By reducing the outstanding share count, they are effectively increasing the ownership stake and the future earnings per share for every single investor who sticks around.
And speaking of dividends, NRG actually increased its annual dividend by 8% in 2026, bringing it up to $1.90 per share. But the real takeaway here, especially for the value-focused investors out there, is their forward guidance. They are targeting an annual dividend growth rate of 7 to 9% per share in subsequent years. That level of targeted compounding growth provides excellent visibility and predictability for anyone analyzing the long-term value of holding this equity.
Section 5, 2026 Outlook and Comparison. Let's synthesize all this data and objectively benchmark NRG against its competitive landscape.
When evaluating a company, it's always super helpful to look at its peers. Let's impartially compare the data between NRG and one of its main competitors, Vistra. We already know NRG boasts that massive 70.67% return on equity, compared to the 11.21% industry average. But looking at recent price performance over the past 3 months, NRG's stock has risen 6.2%, while Vistra shares have actually declined by 2.1%. The data clearly shows that right now, NRG is demonstrating superior valuation efficiency and market performance within the independent power producer space.
So the crucial point is that management expects this momentum to keep rolling. Looking at their reaffirmed guidance for the full year of 2026, the projections are highly robust. They expect adjusted net income to hit between $1.68 billion and $2.11 billion. Adjusted EBITDA is forecast to be between $5.32 billion and $5.82 billion, and free cash flow before growth remains highly elevated, projected between $2.8 billion and $3.3 billion. This guidance demonstrates a remarkably steady and predictable forward trajectory for a company operating in what can, frankly, often be a pretty volatile commodity market.
Which brings us to our final thought for today. We've seen a company operating with a staggering 70.67% return on equity. They are aggressively building a strategic moat through targeted acquisitions and new builds to capture the generational power surge demanded by AI data centers. They are generating billions in free cash flow, and they're returning a massive portion of it directly to shareholders through buybacks and growing dividends. So, looking at all the data we've explored today, you kind of have to ask yourself, is NRG Energy the ultimate value play in the current electrification boom? That's a question I will leave for you to answer as you continue your own research. Thank you so much for joining me on this explainer, and I'll catch you on the next deep dive.